All right. So we're on margin requirements now. Okay. All futures contracts trade on margin. Okay. And the best way that I'm going to be able to explain it to most people out there is one that I got used to in doing a handful of real estate deals in my life when you're buying a home and stuff, and you go into escrow and you have to put in a deposit initially before the transaction happens and the deal is accepted by the buyer or seller or whatever, what have you. You put in a good faith deposit. The buyer puts in a good faith deposit to escrow. And so I kind of like to refer to this margin as kind of like a good faith deposit. The amount you're going to have on your end per contract to put on a trade, whether you're going long, short, the contract of the future markets, one margin, the margin requirement is, hey, do you have what the margin, the good faith deposit, okay, to do the business? Now, the Chicago Mercantile Exchange, in the case here of the micro futures, they are the ones that dictate what the good faith deposit, okay, or the margin is going to be. And it's adjusted now and then by volatility. In this last year here where we had this COVID stuff going around the world, volatility got real out of hand. Markets got real thin. The VIX, blew up, makes everything very unstable. And so there was a lot of movement. Now, professional traders love volatility, may I add, just because the gals that know what they're doing, there's a lot of money to make in that, right? But we're not going to talk about that. We're going to talk about the margin, the good faith deposit, okay? So now, your broker may set their own margins. There's a lot of wholesale brokers out there. I'll go through some of them in the broker videos. There's people out there that they are allowed to, by the Mercantile Exchange, to take on a little bit of that risk on their own to try to bring more liquidity to the table, more participants, more traders. They'll offer cheaper margins, okay? Again, like we call them wholesale brokers out there. Some FCMs, some IBs, introducing brokers will, set their own margins a little bit lower than what the Mercantile Exchange wants as a requirement. There's three categories, okay, of margins. We're going to go through the main one, and we'll break down a couple of the other ones, and I'll give you an example. It gets complicated, and I just want to give the simple version, okay? Day trading margin, initial margin, and maintenance margin. You'll see all three of these out there. It'll start, unmotivating people. Oh, no, I don't understand this stuff. First and foremost, you can always get assistance from your broker. Your broker will explain it all to you. Trust me, they want your business. They're going to make sure that you understand what it is rather than just not deal with it. But day margin, that's what I'm here for anyway. Day margin is how much money, basically do I need to trade one contract of whatever instrument, let's say micro ES instrument that I'm trading. Okay, how much good faith deposit? What's for the daytime trading? What's the day margin? Okay, day margin, micro options as low as $50. Okay, now wholesale brokers, and I like this because when you have more experience, you can leverage more money and stuff like that. But for you to understand, there's wholesale brokers out there that do advertise margins even as low as I've seen $40 per contract on some of these micro futures, and not, I don't know why I put options as well, but micro options, micro futures. Oh, I'm sorry. Yeah, I have options as low as $50 per contract. Okay. Now, my personal recommendation is to have more than that, and you'll find out real sooner than later that, why. For example, like I told you, I explained earlier, 1 point of the micro ES is $5. Well, if you have a $2,000 account, which makes sense, and you're putting on 2% risk per trade, and you have like a 3 to 1 risk reward strategy where you're risking maybe 2 or 3%, then it's $50, risk. But if you go in there with like a $300 or $400 account, and you can get wiped out pretty quick. So it's, again, the margin is okay to use, but use it wisely. And I'd personally again recommend that for every contract you trade, you have a cushion of maybe like for a micro, like 10 times the day margin. Margin calls can't happen if you're not prepared or ready, or you're not trading professionally, and that again will happen when your loss in your account exceeds your account balance. And it also could happen when this thing called initial margins, and we're going to show that on I'm going to use NinjaTrader's intraday and day trading, their current future margins sheet to show you guys what that may entail, okay? So brokers do have some precautions in place. Now, this isn't guaranteed or promised. I've seen this happen. When I was new, it happened once to me. And so I know from experience from almost 10 years ago. And also I know that some may not do it, right? But some brokers that are really proactive may hop in and they might close your position out really quickly rather than just let you sleep on it overnight and let your account draw up. I mean, they're going to protect themselves too. So they're going to close that position out, but they'll charge you a fee, and you'll be hearing from them for sure right away. You'll be getting an email, and on your statement, you'll see a fee for doing that and asking you to pay in a difference. And what I mean from that is having an account. That's what, another way they're going to prevent that, by the way, is making you have a certain account minimum. Just because they have a $50 day trading margin, they may ask you to put $1,000 or $2,000 to open up an account. Some of the bigger companies out there that don't mess around at all and really don't want to see smaller traders to the table, they may ask for 15 grand to open up an account. But it's far from few than many that do that these days. You have a lot of brokers that are okay with you starting up with like as little as $400 to open an account. But just again, make sure you understand what the margin is, what your position is when you're in there. Okay, so what the day margin is 90+% of the brokers. This is true. I want to say 100, but I know that a lot of people have changed their stuff during volatile times. But day trading margin, which is what we're going to be doing mostly, is basically intraday is the U.S. cash session. Let's say I'm going to use Central Time, 8:30 to 3 p.m. Okay, so you're trading anytime. Let's just say during this cash session, that's a day margin. Now, it gets tricky, and I'm going to show this more on document, but intraday margin does count also for the nighttime sessions too. If you're trading, if you work in the daytime and you're going to trade at night, we call it the Globex Session, the electronic Globex Session, when Asia's open and then the London market, you still can use these day margins, okay? People get this confused. But there is a thing in between called the initial margin, which in this case, we're going to define this in our case to make it simple. We're going to define this as the amount required to hold through the day session into the night. This like 1 hour window where the markets close down and do their maintenance and then reconcile from the day cash session in the New York Stock Exchange and stuff like that. And they reconcile and settle out, basically. They settle their stuff and then reopen. In that little gap, if you're going to keep that, that's why I said markets are open 23 hours a day. The 1 hour of that session where it's closed is initial margins are going to be required to hold that position. You now go from, like, for example, they're typically like almost like 80% more than your day margin. So you might go from having to need only $50 on the micro ES to needing $1,100 or $600 or it depends. And I'm going to show you guys an example of that here. I want to give you guys real quick the Investopedia version, and we'll read through this together on what initial and maintenance margin in, because it gets a little bit tricky. Again, that's why I want to be the simplistic version of it. I want to just tell you guys, focus on just day as what I said, and then initial being the amount it's going to take to just hold through that 1 hour close, okay? Anything else will over confuse you, and then you can just refer to your broker from there. Always contact your broker, and they'll make you understand better. But the initial margin is just the amount a trader must deposit to initiate a trading position, okay? It's an amount, even though they say, hey, look, Natalie, you're going to need $500 to, open up an account, and you can day trade with day margin on the micros at $50. They may have an initial margin of $800. So it's at least enough to get your account open, do some sim trading or whatever, but they may need you to still have the initial margin. Now, again, brokers make exceptions and they may not require this, okay? It's up to the broker. Most brokers sometimes haven't been doing it. Maintenance margin in the futures trading, if the account falls below the specified maintenance margin level and the broker sends the trader a margin call, this informs the trader that they must immediately deposit the sufficient funds to bring the account back up to the initial margin level. Let's go ahead and just go through a NinjaTrader of current futures margin sheet. All right, let me try to blow this thing up here. NinjaTrader. This was updated February 12th, 2021. You can get this from your brokers. And basically this is the current margin levels set by the broker. Okay, and in the top here we have some equity indexes, and we're going to go down here to this micro, MES, and you can see here 3 columns: intraday, initial margin, maintenance margin. Okay. All I care about, we'll go into commissions and stuff in a different segment. All I care about to see here, as far as the margin segment, is to see that my intraday margin is $50 per contract. That's what it's gonna. My good faith deposit is gonna be necessary to put on one micro E-mini futures contract with an initial margin of 12.10. This is what it's going to require for me, let's just say for simplistic terms, to hold this trade through the close, and then when they do the Globex open again, this requirement will come off and I'll be able to day trade all night with $50 again. Okay, remember, day trading is not just when the sun is up, it's just when the electronic session is open. Initial margin when the electronic session takes a break. So you have to make sure you're not getting caught up in that. And you shouldn't be anyway, especially with volatility these days, my personal opinion. You don't want to be day trading and get stuck in a contract. Market opens gaps against you, and it's not going to be something you're going to like, and you're going to be upset. A maintenance margin, it's kind of technical. Let's just keep it simple, but it's assuming based on the Investopedia definitions that it's saying, and assuming that if this price, if this 1210 becomes 1100 and you have a contract done, you need to put in the cushion of the extra $110 difference to be able to carry again a contract as overnight like that. So what I'd be more concerned about is initial and intraday. And then another thing I want to talk to you guys about, the best experience is doing it on your own. I can't explain everything perfectly. Everyone's going to explain things differently. Simulated trading will help you get used to this stuff. Okay, I'm going to leave you with this. When you start sim trading, okay, it will show you in your account, okay, the brokers will show you what the margin is being used at that time that you are placing that trade. It'll show your little initial, pretend balance, your simulated balance, and then your simulated margin and stuff like that. And so when you're getting your experience hands-on, you'll start to see what I'm talking about. It's very important that when you sim trade, I would highly recommend use proper balances and trade sizes. Okay, look, I'm guilty of doing this too, and I started like over a decade ago. Put on a trade on crude oil futures and go to sleep for a week, come back and be up $5,000. Or on sim, and oh my god, look at how easy this is, and then the reality hits when you really come to the table and try to do it. So use a proper balance, use a proper trade size. Don't come in there because they give you 100,000 sim account and just trade 10 micro contracts, which is equivalent to one mini contract, by the way. But like, trade how you think you are going to be able to afford to trade. I mean, okay, if you know you have a couple of grand and you're new at this endeavor and you're going to get this down, you're going to open up an account, you're excited, and then you're going to start having to learn your strategy, whatever group you're in or mentor you have for that. Make sure that, when you're simming, in that meantime, whatever you're strategizing, you're doing it properly. Readjust your sim amount if you can. Like, turn your 100,000 into a $2,000 account. Okay, adjust the balance. You can do it. All these brokers, they'll allow you to go to the settings somewhere within your broker platform and readjust your setting to yourself. Give yourself what you're really going to trade with. $5,000, $10,000, $20,000, whatever it is, $2,000, and then sim trade off of that. Okay, and get the real feeling of how it's going to be, and then you'll be able to see. And at the same time, again, the whole point is you'll be able to see the margins being used, and you'll see sometimes little changes, and that's going to probably be due to maybe some volatility. They don't do it quite often. It's not normal, but when things really hit the fan, like some crazy news or something, they may adjust that, during elections or these crazy virus stuff that's been going around. Things got really hectic, right? So, and some brokers were requesting that you had 100% of margin, which means they weren't giving discounts for a while. They wanted the 100% of the initial. So it was tough to trade for some people when things got crazy for a while. Okay, they sustained pretty quickly, but just be aware of that. And in the next video, we will be going through notional value. I want to quickly explain to you guys, some people say, well, what am I really trading? Like, what is the true value of this futures thing? Like, when I put on one contract, why is it so important? Why are people afraid? Why do people say, this is like a really expensive thing, be careful? What's that face value of that one contract? We're going to go through that in the next video.